Hey everyone, welcome back to We Are Cosmic, your go-to spot for everything crypto, finance, and the future of digital money. If you're new here, make sure to hit that subscribe button because today we're diving deep into a topic that's been on everyone's mind, XRP and its potential price explosion. That's right, I'm talking about the possibility of XRP hitting numbers that many people consider impossible. Now, before you get skeptical, stay with me because I'm going to break it down in simple terms so you can understand why this could actually happen. Let's start with the obvious. XRP has been around for a while and its journey has been full of ups and downs. Some people love it, some people hate it, and others just don't understand it. But here's the thing. History tends to repeat itself in crypto. Remember how everyone doubted Bitcoin years ago? People said it was a fad, that it would never reach real value. Fast forward, and Bitcoin is now over 6 figures. XRP might just be on a similar trajectory, but with something Bitcoin didn't have, real-world utility. So, why am I so bullish on XRP? First, let's talk partnerships and adoption. XRP is not just a coin sitting on the blockchain, it's being integrated into financial systems globally. Ripple, the company behind XRP, has connections with massive players like Amazon, MasterCard, Bank of America, Bank of England, and even central banks around the world. That's not a small feat. When you see names like HSBC, Santander, BNY Mellon, and Standard Chartered getting involved, it tells you that big institutions are seriously considering XRP as part of their financial operations. And if big banks start holding XRP on their balance sheets, the demand alone could push the price to levels many think are impossible. Now, some skeptics argue XRP has too much supply to reach high prices. That's a fair point on the surface, but it's missing the bigger picture. We are in a digital revolution, and these assets are not traditional stocks. Supply is only part of the story. The real driver is adoption and utility. XRP is being positioned as a tool to move trillions of dollars across the world efficiently. Banks have billions to invest, and when they start buying XRP en masse, the supply argument becomes less relevant. In fact, it could create a surge in value that surpasses anything we've seen in traditional markets. Another point worth noting is regulation. As governments and regulators get clearer on how crypto can fit into the financial system, coins like XRP stand to benefit the most. Right now, the price might seem suppressed, but this won't last forever. Big institutions don't invest blindly, they move strategically. And with spot XRP ETFs coming soon, we could see a huge influx of capital that drives XRP to new heights. Lastly, let's talk mindset. If you're thinking $10,000 per XRP sounds impossible, remember this. It's easy to dismiss ideas that seem outlandish today. That same skepticism existed for Bitcoin, and while XRP has a higher supply, it also has real utility and partnerships that Bitcoin didn't have in its early days. That combination of adoption, utility, and institutional interest is what makes me confident that XRP has the potential to reach levels most people can't even imagine right now. All right, now that we've set the stage, let's talk about one of the most important factors for XRP's potential growth, institutional adoption. This is where the big players in finance come into play. We're not talking small retail investors here. We're talking banks, global corporations, and financial institutions that move billions of dollars every day. When these organizations start using XRP, it's a game changer. Ripple, the company behind XRP, has built a massive network of partnerships with some of the biggest names in finance. We're talking about companies like MasterCard, Amazon, Bank of America, HSBC, Santander, Standard Chartered, and even central banks like the Bank of England. These institutions are not investing casually. They're looking at XRP as a tool to make cross-border transactions faster, cheaper, and more efficient. That means they have a real practical reason to buy and hold XRP, unlike other coins that rely mostly on speculation. Some people still argue that Bitcoin is better because it has limited supply, which supposedly makes it more valuable. But here's the truth. XRP is not just about scarcity, it's about utility and use cases. Banks can buy XRP in large amounts without worrying about moving the market too much. And because XRP is designed to handle fast, large-scale transactions, it's perfect for institutional adoption. Imagine a bank that needs to move billions of dollars internationally in seconds instead of days. XRP makes that possible, and that kind of real-world application can push demand and price way higher. Another important factor is spot XRP ETFs. These are investment products that allow institutions and retail investors to buy XRP easily, legally, and safely. Once approved and widely available, ETFs will bring massive amounts of capital into XRP. This is different from Bitcoin or other altcoins because it allows mainstream institutions to hold XRP on their balance sheets, similar to how they hold stocks or bonds. And when large financial players start buying in, it doesn't just affect price, it legitimizes XRP as a serious asset. It's also worth noting that the number of non-disclosure agreements, NDAs, Ripple has signed with banks and corporations is staggering. Reports show thousands of NDAs indicating partnerships, trials, and potential adoption deals. Many of these institutions are still on the sidelines, but once they officially join, we could see a sudden surge in XRP demand. This isn't speculation. These are contracts, agreements, and strategic moves happening behind the scenes. When that kind of capital flows into XRP, the price potential is huge. Skeptics often mention market cap limitations, claiming XRP can't reach high prices because the market cap would become too large. But this shows a misunderstanding of how crypto markets work. Unlike stocks, the crypto market is highly liquid and can absorb billions of dollars without needing a one-to-one dollar exchange. A few $billion of investment in XRP can create exponential growth in value because demand outpaces available liquid supply. The market is still emerging, and most people don't yet grasp the scale of global adoption that's coming. Finally, partnerships aren't just about banks. Ripple is connecting with fintechs, payment processors, and global digital currency initiatives like the Digital Euro Association, Digital Pound Foundation, and Digital Dollar Project. This means XRP is not only targeting large financial institutions, but also shaping the future of global finance. When both the private and public sectors start integrating XRP, we are looking at a level of adoption that could dwarf what Bitcoin experienced in its early years. In summary, XRP's growth is not a matter of if, but when large institutions fully adopt it. With partnerships, ETFs, and utility in place, the foundation is already laid. The next wave of price growth won't just be speculative, it will be backed by real financial activity, making XRP a powerful player in the global market. Now that we've covered institutional adoption, let's talk about two key factors that set XRP apart from many other cryptocurrencies: its supply structure and its real-world utility. These two elements could make XRP not just another coin, but a potentially life-changing investment over time. First, let's address a common concern: XRP's total supply. Critics often say, XRP has too many coins to ever reach a high price. At first glance, this seems like a reasonable point. After all, fewer coins usually mean each coin can be more valuable. But here's the thing: XRP's supply is not the full story. Unlike traditional assets, cryptocurrencies don't operate on a simple supply equals value principle. Demand, utility, and adoption are far more important. Even with a large supply, if the demand from banks, corporations, and global payment networks grows exponentially, each XRP can still rise dramatically in value. Next, let's talk about utility, which is where XRP truly shines. XRP was designed to solve a real problem: moving money quickly and cheaply across borders. Traditional banking systems are slow, expensive, and often inefficient. XRP can process thousands of transactions per second with minimal fees. That's huge when you consider that global finance moves trillions of dollars every day. Other cryptocurrencies like Bitcoin are primarily used as stores of value or speculative assets, but XRP has actual use cases that make it indispensable for real-world financial operations. Now imagine what happens when both supply and utility meet institutional adoption. Banks with billions to deploy start holding XRP on their balance sheets. Large corporations use it to move money across continents instantly. Digital currency projects like the Digital Euro or Digital Dollar start integrating XRP into their systems. The combination of high demand, strategic use cases, and liquidity can create enormous upward pressure on price, much more than a cryptocurrency that is purely speculative. Another advantage of XRP is its scalability. Many cryptocurrencies face bottlenecks when transaction volume increases. Slow processing times and high fees can limit their usefulness. XRP, however, is built to handle massive transaction volumes without congestion. This makes it ideal for both institutional finance and global remittance networks, meaning it has practical long-term value, not just hype. Skeptics may also bring up market cap arguments, claiming XRP cannot reach high levels because of the sheer number of coins. But again, they are misunderstanding crypto markets. Unlike stocks, crypto markets can grow faster and are not directly tied to traditional market capitalization in the same way. A few $1 billion in inflows can create significant price movement, especially as adoption grows and supply gets locked up by institutional holdings. When large amounts of XRP are held off exchanges, available liquid supply drops, making each coin more valuable. It's also important to remember that utility drives trust and longevity. Bitcoin was revolutionary as the first digital money, but its main function is still as a store of value. XRP, on the other hand, offers both value storage and functionality, giving it an edge in the long-term adoption race. As the global financial system modernizes, a coin that can do both will naturally see more sustained demand. Finally, consider the psychological factor. As more institutions adopt XRP, smaller investors will notice and jump in. This creates a feedback loop where adoption drives demand, which drives price, which encourages more adoption. It's the same kind of network effect that has made Bitcoin and Ethereum household names, but XRP has the added advantage of proven utility and integration into financial systems. In short, XRP's large supply is not a weakness. It's an opportunity when combined with utility, scalability, and institutional adoption. This is what gives XRP the potential to reach price points that many consider unrealistic today. Over time, the combination of these factors could make XRP one of the most powerful assets in the crypto world. Now that we've covered adoption, supply, and utility, it's time to look at another major factor that could influence XRP's price, regulation, and macroeconomic events. Many people underestimate how powerful these factors can be, especially for a coin like XRP that is closely tied to the financial system. First, let's talk about regulation. Governments and central banks around the world are beginning to pay close attention to cryptocurrencies. XRP is in a unique position because Ripple actively works with regulators rather than ignoring them. While some coins operate in a legal gray area, XRP is designed to comply with regulations. This makes it much more appealing for banks, ETFs, and large financial institutions because they prefer assets that won't create legal headaches. A key piece of news that could affect XRP is leadership changes in central banks like the Federal Reserve. Recently, reports have suggested that Federal Reserve Chair Jerome Powell might step down. While the exact timing or confirmation isn't certain, any new leadership could have a major effect on interest rates and monetary policy. Lower interest rates often mean more money flows into assets like cryptocurrencies because people look for higher returns outside traditional finance. XRP could be a prime beneficiary if the macro environment encourages investment in digital assets. Another regulatory angle is the approval of XRP spot ETFs. Once these ETFs are allowed, institutions will have a simple, regulated way to hold XRP. This will likely bring a massive wave of capital into the market. Keep in mind, ETFs are not just small-scale investments. They are designed for large institutions. When this happens, XRP could see price movements far faster and larger than many people expect. We also need to consider global macro events. Cryptocurrency markets do not exist in isolation. Inflation, geopolitical tensions, and global financial instability can all push money into digital assets. XRP, with its real-world utility for cross-border payments, is particularly attractive during uncertain times. If banks and multinational corporations need a fast, reliable way to move money across borders, XRP could become their go-to solution, which drives adoption and, in turn, price. It's important to address the skeptics who worry about regulatory crackdowns. Yes, governments could try to impose restrictions, but XRP is well-positioned to work within existing frameworks. Ripple has shown that it can partner with regulators instead of working against them. This gives XRP an advantage over other coins that might face legal challenges or outright bans. In fact, regulatory clarity tends to attract more investors, not fewer. When institutions see clear rules, they are much more likely to invest large sums. Another interesting point is how these macro events interact with adoption. If large banks and corporations start holding XRP during a period of market uncertainty, it could create a safe haven effect. People often look for reliable assets when traditional markets are volatile, and XRP could fill that role because it is backed by real partnerships and utility, not just speculation. Finally, all of this points to one major conclusion. XRP's price isn't just about hype, it's about systemic factors. Institutional adoption, regulatory clarity, and macroeconomic shifts are all aligning in a way that could push XRP higher. While the price might fluctuate in the short term, the long-term trajectory looks promising if these trends continue. Regulations and macro events are not obstacles for XRP. They are potential catalysts. Leadership changes in central banks, approval of XRP ETFs, and global financial trends could all create opportunities for XRP to rise significantly in value. For anyone holding XRP or considering entering the market, keeping an eye on these developments is just as important as following the price charts. Now that we've explored adoption, utility, and regulatory factors, let's turn to the question on everyone's mind. How high could XRP actually go? While no one can predict the future with 100% certainty, looking at historical trends and current market dynamics can give us a realistic framework. First, let's remember how Bitcoin's journey unfolded. Years ago, skeptics said Bitcoin would never reach $1,000, then $10,000. Today, it's well over six figures. Many of the same arguments against Bitcoin, supply, volatility, and adoption, apply to XRP, but there's one major difference. XRP has real utility. Banks and financial institutions are already integrating it for cross-border payments, treasury reserves, and other operations. This makes its potential growth more grounded in reality rather than pure speculation. When people talk about XRP reaching $10,000 per coin or even higher, it's easy to dismiss. But consider this. XRP has thousands of partnerships with banks, payment processors, and fintech platforms. Large institutions are preparing to hold XRP on their balance sheets through spot ETFs. Even if XRP only captures a small fraction of global financial transactions, the value per coin could increase dramatically due to scarcity in liquid supply. Unlike Bitcoin, which is largely held for long-term investment, XRP's coins are actively being used for transactions, which can create dynamic upward pressure on price. Historical comparisons also show us what's possible during periods of adoption and hype. In 2017, XRP experienced massive gains purely from speculation, hitting thousands of % increases in a short time. That was before major regulatory clarity, institutional adoption, and real-world utility were fully in place. Imagine what could happen now, when all three of these factors are aligning. The potential for a similar or even larger surge exists, but this time it could be supported by actual use, not just hype. Another important factor in price projection is market cap perspective. Some critics argue that XRP cannot reach high values because its market cap would have to be too big. But this shows a misunderstanding of crypto markets. Unlike traditional stocks, cryptocurrency markets are highly liquid and can absorb billions of dollars without needing a one-to-one conversion in USD. A few $billion of institutional capital entering XRP can move the price substantially, especially as more coins get held off exchanges, reducing available supply. We also need to consider gradual accumulation and FOMO, fear of missing out. As more institutions adopt XRP and the price begins to rise, smaller investors will take notice. This triggers a feedback loop where adoption drives demand, driving price further. Unlike in speculative rallies, this time the increase is backed by real adoption and partnerships, which adds credibility and stability to the upward trend. Looking at shorter-term projections, events like ETF approvals, central bank policies, and global macro trends could trigger sudden price movements. On the medium to long term, widespread adoption by banks, corporations, and even government-backed digital currency projects could realistically push XRP into the five-figure range per coin, especially if liquid supply decreases as more XRP is held long-term. Finally, it's important to remain grounded yet optimistic. XRP's price may fluctuate daily, but the long-term trajectory is supported by tangible factors: utility, adoption, partnerships, regulatory clarity, and macroeconomic trends. If you compare XRP to Bitcoin's early years, the potential is enormous. Unlike Bitcoin, XRP has practical use, which could help it reach levels previously thought impossible. While $10,000 per XRP may sound ambitious, historical comparisons, institutional adoption, and market dynamics suggest that massive growth is not unrealistic. The combination of liquidity, utility, and real-world integration could create price opportunities that are grounded in reality, not just hype. For long-term investors, understanding these dynamics is key to positioning for potential upside while staying informed about risks. All right. We've covered a lot so far: adoption, supply, utility, regulation, macro trends, and price projections. Now it's time to wrap it all up and give you a clear roadmap for understanding XRP's potential and what it could mean for investors like you. First, let's summarize the main points. XRP is unique because it combines utility with adoption. Unlike many cryptocurrencies that are purely speculative, XRP is being actively integrated into financial systems worldwide. Banks, corporations, and even central banks are exploring how to use XRP for fast, low-cost transactions and cross-border payments. This real-world use gives it a solid foundation for long-term growth. Second, the supply and market dynamics of XRP are often misunderstood. While it has a larger supply than Bitcoin, that doesn't limit its potential. Institutional adoption and ETFs can create massive demand, while liquid supply decreases as more XRP is held long-term. This means the price per coin can rise significantly without requiring unrealistic levels of investment. Third, regulation and macroeconomic events are not barriers, they are catalysts. Leadership changes in the Federal Reserve, approval of XRP ETFs, and global financial trends could all push capital into XRP. Ripple's proactive approach to working with regulators positions XRP to benefit from clarity and legitimacy, unlike some other coins that may face legal challenges. Fourth, historical trends show what's possible. We've seen coins like Bitcoin and XRP itself experience massive gains during adoption waves. The difference now is that XRP has utility, partnerships, and institutional backing, making a future surge more grounded and sustainable than past speculative rallies. So what does this mean for you as an investor? Here's a simple roadmap. Understand the fundamentals. XRP isn't just about price hype. Focus on its real-world use, partnerships, and the growing adoption by banks and corporations. The more you understand the ecosystem, the better you can make informed decisions. Watch regulatory developments. ETF approvals, central bank decisions, and global digital currency initiatives are key triggers for XRP's growth. Stay informed and monitor credible news sources. Consider long-term holding. While daily price swings can be dramatic, the real potential comes from holding XRP through adoption cycles. Even small amounts of XRP over time could translate into significant gains if the long-term trends play out. Monitor market liquidity. As institutions hold more XRP, liquid supply decreases. This is when price movements can accelerate. Tracking exchange volumes and institutional flows can help you anticipate changes. Be patient but prepared. Big moves don't happen overnight. Historical trends show that explosive growth can occur quickly once adoption reaches a tipping point. Be ready to act when opportunities arise, but avoid panic decisions based on short-term fluctuations. Stay informed about global finance trends. XRP's potential is closely tied to the broader financial system. Inflation, interest rates, and macroeconomic shifts all influence investment decisions by institutions. Understanding the bigger picture will help you position your XRP investments wisely. In conclusion, XRP is not just another cryptocurrency. It is a powerful digital asset with real-world utility, institutional support, and a pathway to massive adoption. While skeptics focus on supply or market cap arguments, history shows us that adoption, partnerships, and utility matter more. If you approach XRP strategically, staying informed and watching for key triggers, it could be a game-changing addition to your investment